Okay, thank you. Once again, good evening, everybody, and welcome to Bursa Malaysia Eye's webinar. This episode, where we will discover why ETFs suit busy investors like you. And today we have a very special guest, Encik Khairi Sharin Arif, who is the CEO of i-ETFs, which basically manages 5 of the ETFs available in Bursa Malaysia. So we want to basically share with you why you should consider or you should be having ETFs into your investment portfolio. We're going to explain to you the benefits and the importance of having ETFs into your investment portfolio. So let me explain what ETF is all about. Basically, an ETF or an exchange traded fund is a marketable security, which is basically like a stock that you buy and sell in the stock market, but it tracks an index, or it can be commodities or a basket of funds, or even the index itself. There is a slight difference between mutual funds, because mutual funds is also a fund that tracks a few of the commodities, or even the equity index, or gold and other commodities as well. We're going to explain to you as well what are the difference between a mutual fund and an ETF as well. And the main difference is basically an ETF, or exchange traded fund, is traded on the exchange, and in this case the Malaysian ETFs are traded on Bursa Malaysia, unlike mutual funds where you can only buy and sell through the company that manages the fund, right? So ETFs, of course, when it's traded in the exchange, has certain benefits we're going to cover in a short while. So if you look at the way of investing ETF, I mean, we have actually an option to invest in ETF. Either we can, for example, if you want to buy, let's say, a basket of stocks, right? And you have, let's say, you want to buy 5 different stocks. You need to have capital for these 5 different stocks, and of course, if you want to track the index, for example, the KLCI index, which consists of 30 stocks, you actually have to buy each and every single stock, and depends on the weightage and the index, to get a proper investment portfolio that tracks the index, and that's going to cost a lot of money. So instead of doing that, we can actually buy an ETF, which is a basket of these stocks available, and of course, you only need to buy one, but you have an exposure of the many stocks in that particular basket of ETF. So you have less money, you can actually start buying ETFs, but you can have actually a portfolio of stocks, right? And what is i-ETF? So I basically stands for Islamic ETFs, and we have been we went through a series of webinars to explain to you what i-ETF, or what Islamic or Sharia compliant ETFs and stocks is all about. So basically, an i-ETF is a Sharia compliant ETF, right? So right here we have, right here with me, we have Encik Khairi Sharin Arif. He will be doing most of the talking because he's the expert matter. He has been in the market for more than 14 years, right? And he's currently the CEO of i-ETFs, which manages about 5 Sharia compliant ETFs in Bursa Malaysia. So, Encik Khairi, welcome.
Thank you, Benny.
So we already have, we talked a little bit about ETFs, but what would be the benefits of having an exchange traded fund as compared to buying a mutual fund or buying directly in stocks?
Okay. Right. First of all, low cost structure. Okay, as compared to, for example, a mutual fund. Okay, there's no sales charge. Okay, there's no upfront sales charge fees. There's no what do you call that? When you sell it, there's a charge fees. There's none of those. The only thing, when you want to buy an ETF, the only cost will be your brokerage. That's it.
So it's like buying a stock, lah.
Yeah, just like buying a stock. Yeah. Okay. Whereas mutual funds or unit trusts, they charge you a certain percentage for the sales fees. When you buy ETFs, I guess nowadays brokers will charge you probably 0.1%.
Yeah, it's really low.
Yeah, that's your cost.
Yeah.
Okay, and then furthermore, on yearly basis, you will have a annual management fee, right?
Yes.
Again, funds are charging 1.5% or 2%. When it comes to ETFs, as low as 0.1%, or some even 0.05%. But of
Right.
course, in Malaysia, we're still new in this. Our charges are still high, a bit higher at 0.5%. But at 0.5%, it's still easily 0.5% or 1% lower than any mutual funds or unit trust annual fees. So that's first of all the low cost structure. And then the ease of transaction. Anytime between 9 a.m. until 5 p.m., you can buy because it's listed in Bursa, so you can buy anytime. So there's a market price, there's a bid and offer. So you want to buy, you look at the offer price, and if you want to sell, you look at the bid. So it's as simple as that.
So it's not like mutual funds where the prices are actually set by the company that sells the
No.
funds, right?
Yeah, so
Yeah.
it is there listed, and you just follow the market price. So
Right.
that's second, ease of transaction, and you can easily use this to build your portfolio as a core holding. I give a very simple example. Say you have 10,000 ringgit to invest, right? And you want some of this money to invest in, for example, like when you mentioned the KLCI stocks. Okay, there's a ETF that's available to follow the KLCI, but it's non-Sharia. With the Sharia ones, we have a Dow Jones Islamic Malaysia that follows the biggest 25 companies in Malaysia, Sharia compliant. So you may not really follow KLCI, but a lot of KLCI companies are in that ETF. So when you have an exposure in the Malaysia market, with as low as probably about 100 ringgit, you can have exposure to all the 30
All the
companies.
companies,
Yeah,
yes.
whereas like you mentioned, if you want to buy each of those 30 companies, it's going to cost you a lot, even though you're buying, because you have to buy 100 units
Yes.
for each of the stocks. This one, we put it all together in one fund, and we have 25 companies in one ETF, and the ETF will cost you as low as 100 plus.
Yeah. So you mentioned about 100 ringgit, right? So, like, for example, if I believe Nestle is probably one of the stocks that is in the fund itself.
Yeah.
Nestle is about 140 ringgit, right? And if you
Correct,
buy
yeah.
100 shares, it's going to cost 14,000 ringgit
Yes,
just to
yeah.
buy one lot of the shares.
Correct,
So
yeah.
this would be a much easier entry.
Yes, you will get the exposure.
get the exposure.
Tenaga, for example, even 15 ringgit, right? And any other stocks. So all these stocks are in the ETF. So depends on which ETF you choose from. Some of these names are in these ETFs, and there's a basket of 25, basket of 30, and some of the basket of 50 names inside it. Yeah. So another thing, apart from core holding, you can also use it as a portfolio diversification. Why is that? Because there are ETFs that we have, only two in Malaysia. The other three, one is ASEAN, another one is Asia Pacific, and the most recent one that we launched is a US 50.
Right.
So in terms of diversification, you don't want to put everything in Malaysia market, right? Year to date also, market probably up. I don't know. I haven't seen the data. Probably 1% or maybe less than 1%. But because of for diversification, if you invested in our US 50 ETF, as at end of September, it was up by 10%.
Right.
And if you put in currency, it's actually up by 15%. So you can have that diversification there by buying ETFs, which is not just about Malaysia, but it's actually ETFs about outside Malaysia as well.
Yes. Yeah, I was looking at the US ETF that you mentioned, right? And recently we see a very sharp fall in the US markets. But it doesn't really affect that unit trust price that much, isn't it?
Yeah, because it's a basket of 50 names, right? So not all 50 counters has dropped. Okay, so I mean some have dropped, maybe 10% or more, or some less. So but in totality, we have 50 names, and 50 out of these 50 names, 50% is actually tech stocks. So not all the tech stocks have dropped. You've seen some names have mentioned they're stable quite well. So as a basket, it probably dropped, I don't know, probably about 5% or less than 5%. So it's been holding on quite well. So again, as I mentioned about diversification, this is a way for you to diversify your investment. So yeah.
So in a way, it actually mitigates the risk as well, right?
Correct. Yeah.
Instead of
yeah.
buying
Reduce the risk. Yeah.
Right,
Definitely. Yeah.
So any other benefits that you see in ETF?
Another way for you to look at ETFs, apart from to build your core holding of your portfolio, it also to complete your portfolio. In other words, say when you have invested 80% of your money and you still have 20% left, and you're not sure like which stock to buy, but you want to complete your portfolio, you can again use ETFs. Say you want an exposure in Japan, you want exposure in China, you want exposure in different markets. So again, you use it to complete your portfolio by buying the your final 20% of your investment, just buying ETF. Why? Because it's easy for you to go in, and Say when the market is down, you want to divest your investment, you want to get rid of, you just sell one portfolio or one ETS, it get rid of the whole portfolio.
Yeah,
I mean
instead,
the whole,
of selling one stock at a time,
yes, yeah,
it's
you
quite
have
difficult.
faced the liquidity issue as well on that one. Yeah.
So I think one of the good benefits is ETFs is it gives us an exposure to start investing in, let's say, in the US markets, right?
Yeah.
Because as a Malaysian, we probably do not know what's happening in the US market.
Yeah.
We do not know which stock to buy and so on and so
Yes.
forth.
True.
So
Yeah.
this will be a very good entry.
Yeah, totally. Even when you look at Google, yeah, in US you can just buy one share, but one Google share is going to cost you more than 1,000 US dollars. So that's about 4,000 ringgit.
Right.
You can buy our US 50 ETFs from 400 ringgit, and what do you get? An exposure to 50 companies, the likes of Apple, the likes of Google, the likes of Microsoft. You know, all these names are in there.
Right. Yeah. So, and what about dividends? Because the companies will receive dividends from them.
Yes.
So, will
Yeah.
these dividends be passed on to the unit holders as well?
Yes, yeah, it'll be passed on a yearly basis. On average, some of our ETFs has given something between 2 to 3%.
Right.
So it's not pure dividend play, but is you have a capital appreciation plus the dividend. Yeah, it will be given on once a year basis. Yeah.
Right. So basically, it's like any stock. You can actually get your investments return on investments from the capital gains I just mentioned, and also through the dividends itself.
Yeah. Yes, both.
Right.
Totally. Yeah.
So we're going to come back, and Kyrie is going to actually share with us the different type of ETFs that actually i-ETF manages, and you can see what kind of exposure you have in different markets.
Okay. Yeah.
But before we go there, we're going to have a short poll, and the question is basically quite simple. Have you invested in an ETF before? So you can just select either yes or no, and we'll come back with this answer in a short while. Now let's take a look at the results. Well, so we have like 90% actually not invested, and hopefully after today's explanation, this number will change. In fact, I only got to know about ETFs actually just quite recently when because for every funds or for every asset classes, we need to look at performance, and I think the ETFs has already gone through many years, right? We have the first ETF in 2008.
In i-ETF, first ETF in 2008. In Malaysia, I think as early as 2003, actually.
Right. So you actually have a historical performance that you can actually already see, right? So that would be interesting. I think we should really look into the performances of the ETFs, and you can even compare it with the mutual funds, for example. Right. So now Kyrie is going to explain to us the 5 different ETFs that i-ETF has, and what are the differences, what it comprises, and how you can actually invest in these ETFs.
Okay. All right. Sure.
Right?
Okay.
So we're going to start off with the MyETF, Dow Jones Islamic Market, the Malaysian Titan, and this is the first ETF that actually listed in Bursa Malaysia.
Correct. Yes.
And that was on 1st of January 2008.
First Sharia compliant. I have to
first Sharia compliant. It's not the first ETF, right? It's the first Sharia compliant.
Yeah.
So maybe, Kyrie, you can explain to us what is the ETF all about?
Sure. don't get confused when the words Dow Jones there. You think it's the US? No, it's actually my ETF Dow Jones. That's the index. It's actually Islamic Market Malaysia. It's the 25, the Titans 25 is the first Sharia compliant listed in 2008, and then this complies with all the Islamic investment laws and supervised by the Sharia Advising Committee. It gives exposure or it tracks the performance of the benchmark index, the Dow Jones Islamic Market Malaysia Titans 25 index. Quite long. In short, we just call it DJIM, DJIM, Titans
Yeah.
25. The objective is actually to have 25 largest market cap Sharia compliant companies that kind of represent the broad economy of Malaysia, but Sharia compliant only. So for you to have exposure in the biggest 25 companies, Sharia compliant, this is the right ETF for you.
Right.
Yeah.
And all these 25 companies that you mentioned, there most of them are
Mm.
in the composite index.
Not all, because we have all the financial names inside there, but I would say at least about 50% actually is in the KLCI. Yeah.
And I will show you the performance actually later on,
Yeah.
the performance of this against
Mm.
the KLCI.
Yeah.
And no, initially when I look at this, you actually really follow, it tracks the index
Yes.
quite tightly, right?
Yeah.
Yeah. What about the next ETF, which is basically
Okay.
the my ETF MSCI Malaysia Islamic Dividend,
Yeah.
my ETFID.
Yes. In short, we just call it my ETF MMID.
MMID.
So when there's a D at the back, usually it's about dividend.
Dividends.
Yeah. Okay. So again, this ETF provides the opportunity for to get a dividend income as well as capital growth in the companies that gives you the highest dividend. All right. And it's a mixture of a large and mid cap domestic stocks. We have been tracking these dividend yielding stocks and since its launch back in 2014, and I must say this is one of the best performing ETF.
Right.
In 2017 alone,
Mm.
full year of 2017, this ETF performed 17%,
Right.
much higher than KLCI
KLCI.
returns at about 8+%.
Right.
Yeah.
Right.
So this is so you get a capital gain as well as dividends as well.
Right.
Yeah.
Right. Yeah. We'll show you the performance
Yeah.
in a short
Okay.
while.
Yeah.
But no, you have so you basically choose the stocks on the companies that provide the highest dividends
Correct.
in the
Yes.
market.
Yeah. The highest dividend.
You know,
Yeah.
one thing I want to ask you, Encik Khairi, how often do you actually revise or rebalance your portfolio?
Yeah, we call it rebalancing.
Yeah.
We do it only every quarter,
Every
so four
quarter.
times a year. So there's two big, we call it big rebalancing, and another two small,
Minor ones.
minor rebalancing.
Right.
Yeah,
Right.
that's
Right.
all. That's what passive investment is all about.
Yes. Yes.
You don't go in and out
Every
all
day,
the
right?
time, every day. Um, we select all the best companies already, and that's why we have index. We do all the screenings. This is done by our index provider. So for example, like my ETF MSCI is done by our partner MSCI. When it
Right.
comes to Dow Jones earlier, it's done
Done by
by
Dow Jones.
by the Dow Jones,
I
which is
see.
our what do you call that, the index provider.
Right.
Yeah.
Right. Right. Okay. So the next one, we're going to have this my ETF MSCI Southeast Asia Islamic Dividend.
Yeah. Okay. Again, there's the word D there.
Yeah. So it's dividend.
So yeah, it's dividend. Yeah.
Right.
MSID. We call it my ETF MSID. Southeast Asia dividend. Again, it provides the exposure to dividend yielding stocks that are Sharia compliant within Southeast Asia. So you get immediate access to five markets: Malaysia, Indonesia, Philippines, Singapore, and Thailand.
Right.
Okay. Additionally, the fund also will expose investors to currency fluctuation as well. Okay, because it's listed in ringgit. But the way we look at it, again, I mentioned earlier about diversification.
Right.
So if everything that you put or just in Malaysia, so you might want to look into this for you to invest into other markets in Southeast Asia. That's the whole idea. Yeah.
Right. So investing in these foreign markets will give you can actually hedge the ringgit against these foreign currencies as well. If let's say you have an exposure to the Southeast Asian market, right? And of course, if the if ringgit let's say gets weaker, you can actually benefit from the strengthening of the other currencies.
Yes, yeah. I mean, it's vice versa. So there's a kind of risk, that the investors have to take, because again, it's about how you position yourself, how you want to strategize your investment. If you're think that the currencies are weakening or are getting stronger, and that's when you want to go in and out into these ETFs or into these markets.
Right.
Yeah,
Right.
it depends on the view. So I guess all investors have to do a bit of homework and study a bit,
Yes.
rather than straight go into it.
Yes.
Yeah.
Yes. So for this ETF, for example, which country has the biggest exposure for this?
It's still Malaysia.
It's
Malaysia still
Malaysia.
has the biggest exposure, but again, because we have more Sharia compliant names, and
Right.
it's based on the market cap as well.
Right.
Yeah, so hence we have more of these
More Malaysian stocks now.
companies, yeah, Malaysian stocks. But again, the whole idea, it gives you exposure to Indonesia, Thailand, Singapore, and Philippines.
Right.
Yeah.
Right. So the fourth one, we actually have the i-ETF Thomson Reuters Asia Pacific ex Japan. Maybe you want to explain what
Yes.
is that all about? Islamic agri businesses.
Yeah, correct. This is unique, a very unique product. Okay. We were looking at to come up with a thematic kind of play,
Right.
and not in Malaysia, but in in Asia Pacific. And the idea is to look into agribusiness across 10 countries: Malaysia, Australia, Hong Kong, Indonesia, Philippines, even Singapore, South Korea, Taiwan, Thailand, and New Zealand.
Mm.
So the idea is for them to gain, again, there's a exposure to any agribusiness across Asia Pacific. So we just try
Right.
to be a bit unique here,
Right.
more thematic kind of
Right.
play.
So
Yeah.
this is this agri-business
Yes.
specifically lah.
Yeah.
Right.
Correct.
Right.
Yeah.
Right. Right. And the last one we actually have is this is the latest one that you have just
Yes, yeah, this
issued,
is
right?
the one that we really excited about.
Mm.
The my ETF Dow Jones US Titans 50. This time around, when mentioned Dow Jones, is actually
It's
mentioned
actually
US
Dow Jones.
Titans 50. Yeah, it's actually all the stocks, or the 50 stocks, are in US. Okay, Sharia compliant. And the 50 largest Sharia compliant companies listed in US. We got the names of Apple, we got the names of Google, Microsoft, Facebook, Johnson and Johnson, and a lot of other names. So you can look into our website later,
Yeah.
and you can find all these 15 stocks in US. Why we're really excited about this? Because for once, or for the very first time in the Bursa's history, it's listed in US dollar, not in ringgit.
Oh, it's in the US
Yeah,
dollar.
it's in US denominated.
Okay.
Yeah, it's the first time ever
All right.
done in Bursa, listed in Bursa in US denominated. Again, it gives you a direct exposure into US companies in US dollar.
Right.
Yeah,
Right.
and more interestingly, the performance, because again, I always have to go back to the whole diversification.
Right.
Year to date, Malaysia market has performing, I would say, not that well, but US has done very, very well.
Yes,
Okay.
yes.
So as at end of September, well, market did go down the past 2 weeks, but as at end of September, the fund performed NAV, or market price, 10%.
Mm.
And then if you add the currency into it, because if you're Malaysian, your income will be in ringgit,
Yes.
but you invest in US dollar.
US dollar.
But later on, when you sell, you get back your money,
Right.
of course, US dollar, and you change back to ringgit,
Right.
additional 5% on the currency.
Right.
So that's like 15% in end of February until end of September. That's like 7 months.
Right.
Yeah, 15% return.
Oh, that's quite good.
Yeah, that's very good. And for any investors who wants to diversify, this is the kind of product. Why we're excited? Because we are looking at more other markets for us to come up with new ETFs for investors in Malaysia to invest. The likes of Japan, the likes of China, the likes of Europe in future.
Right.
Yeah.
Right. So in future, do you have any plans for next year? Do you have any new ETFs?
Yeah, well, I can't reveal.
Just
But
tell us
what
the numbers, maybe.
yeah, but it's not about the numbers.
Yeah.
It's about the market that
Right.
that we are trying to enter, and also we're looking at more thematic kind of ETF. I guess people in recent years are very excited about tech, for
Technology,
example.
yes,
Yeah,
yes.
tech. So we are looking at that space, to come up with a new ETF, which gives again Malaysians, to diversify
Right.
their investment into probably a global tech or US tech companies, or even Asia. We have Taiwan, we have Korea, we have China with all these tech companies.
Right.
We're looking into that.
Right, right. Great, great. So more exciting things coming up next year.
Yes, definitely.
All right. So we will go on with our workshop, but before that, we're gonna come up with another poll, and basically asking if you know that 90% of them not investing
Yeah.
into ETFs. So we wanted to know why.
Okay.
So at least we know how to actually address this issue
Yeah.
later. So the next question will be, we actually provided some answers for you to answer. You just have to select the one that is most affecting you, why you're not investing ETFs. Thank you very much for your participation, and let's take a look at the poll results. Okay, so the biggest chunk was not much information available. That's 56%. No volume is 44%. Well, there's still a lot of people who do not know that ETF can actually trade ETFs in the Bursa Malaysia. And
Surprise, surprise.
surprise, surprise. But no, I think you'll agree that the ETF is one of the investment asset class that is one of the most rapid growing investment asset class, especially in the US,
Yes,
right?
yeah.
Because even today, fund managers are investing into ETFs.
Yeah.
Right? So do you want to basically explain how strong the growth in ETF?
Oh, the growth has been tremendous. ETF started back in 1993 globally, the first ETF listed. It took them 17 years to reach 1 trillion US dollar in terms of asset under management, or in short, we call it AUM. That's from 1993 until 2010.
Right.
Okay, but from 2010, when they reached the first trillion, and year to date until now, it's already touched 5 trillion, or almost to 5 trillion. So in this short span of 8 years,
It's grown
it
five
has
times.
jumped 5 times.
Wow.
So that's globally how big. In fact, I don't have the data here, but we have seen the data showing that in the past 5 years, there's net increase, of course, in ETF, like I mentioned just now. But at the same time, they saw a decrease in mutual funds.
Right.
So people are exiting mutual funds, and I guess they're putting their money into ETFs because,
Right.
like I mentioned earlier, it's low cost,
Right.
easy to enter, and easy to exit as well.
Right,
Yeah.
right. So yeah, if I understand, there's a much more benefit in investing in ETFs directly
Yes.
than mutual funds. I'll probably want to shift it because I think the performance will be almost on par with mutual funds, or probably better because your costs are low, right?
Yeah. When you create net, I would say it's better than
Definitely better, yeah.
mutual funds, because there have been a lot of studies when you look into this, when they stretch over a period of time, the mutual funds actually has not been performing that well, whereas ETF basically following a lot of, then follow index, right? And of course that, for you to be inside any index, there are a lot of screening. So only the best companies usually they put inside the index for certain reasons. So
Right.
hence, the index will always beat all these mutual funds actually
Right.
performance. Yeah,
Right.
but you cannot take it in probably 3 months or 6 months or 12 months, but you have to look at more of the mid to long term
Yeah,
period.
yeah.
Then you see the performance. I just want to go back to the question, the poll that you did just now.
Yep.
The two biggest, the highest percentage
Right.
mentioned about info as well as volumes. I think we're going to touch on volumes
Yeah, we're gonna
later,
touch
right?
on volume
Yeah.
later, inshallah.
On
Yeah.
information, actually, well, in the current world where you have your smartphones, we have your laptops and iPads and everything. The moment you type ETF, a lot of information
Yes.
available on the internet. But of course, if you wanna come closer to Malaysia, I think, for example, like our own my-ETF. .com.my, we share a lot of information about ETFs there. Even if it's not our own website, there's a lot of other websites also that do talks about these ETFs. But I think the word ETFs itself, or people just do not have enough idea about ETFs. But
Right.
when you say about info, I just think that I just want to correct that. You go
Yeah.
into, you just Google it. It is there. All
Yeah.
kinds of information is
Yeah.
available about ETFs.
And,
Yeah.
and and like most company, you also have these annual reports that you actually provide to
Yes,
them,
yeah,
and they
we
can
provide
actually
on
look at
monthly
it.
basis. In fact, our fact sheets we
Oh,
have on
really?
monthly basis. Again, if you go to our my ETF for our own 5 ETFs that
Right.
we have our fact sheets there. You can click on it. You can just scroll in and find the fact sheets in terms of the performance. And
Right.
yeah, we update on monthly basis, so you
Right.
can really see the performance, and you can compare with KLCI or any
Right.
other
Right.
index how the performance has been.
So in other words, it's actually more transparent than mutual funds, isn't it? Because when
Yeah.
you put the money in mutual funds, we don't even ask, no question asked. We do
Yeah.
not know what they're doing, how they're performing.
Yeah.
Just basically putting our money there.
Yes.
Yeah, you probably on a monthly basis. Or this is new to me actually. I thought
Yeah.
it's just an annual thing.
No, it's
Wow.
on monthly basis, and then also Leaper. Actually, we also on Leaper
Right.
table. Those who are not familiar, on Leaper table, actually they track the performance of mutual funds or unit trusts. And in Malaysia, we call it more unit trust than
Unit trust,
mutual
yeah.
funds. Our fund is there, and I'm proud to say our two funds, the Malaysian funds, the Islamic, actually sitting at number one and number two.
That's the dividend one, is it?
The dividend as well as the other one, the Dow Jones Islamic, because
Ah,
there is two
right.
tables. One is for the I think the Islamic equity, another one is for the dividend funds. So we're sitting number one and number two
Right.
in respective tables
Yeah, I was
against the mutual funds, okay, which is active, actively managed by
yes, yes,
the
yes.
ours is just passive, yeah.
Right, right, right. I was quite surprised when I was doing the performance at the CTS, and I found out that
Yeah.
I really wish we were going to share with
Yes.
you in a
Yeah.
short while, right? Yeah. So what we're going to do is basically also explain to you how do you actually find ETF. I think one of the things that as a stock investor, we
Mm.
always look at companies' financial reports. Look at their profits and their cash flows and
Mm-hmm.
their
Yeah.
dividend policy and so on and so forth. But what do we look for in an ETF? What kind of information that we have to look for before we want to start investing in ETFs?
Okay. For any investors, first of all, you have to do your asset allocation, right? Again, I just start with a small amount of money, say 10,000 ringgit, right?
Right.
What do you want to do with 10,000? What are you trying to achieve? All right. What sort of returns are you looking at? Okay. So we have different ETFs cater for different types of investors.
Right.
As I mentioned earlier, we have the Dow Jones Islamic Malaysia, the biggest 25 market cap. So that means you want a exposure, something similar to KLCI, for example, but within the Sharia compliant stocks. So that you have the Dow Jones Islamic Malaysia. If you're looking for a dividend, then we have the dividend ETFs,
Yes.
right? If you're looking for more thematic, okay, I mean globally also there's thousands of ETFs. Some are very thematic, following certain thematic, for example, the finance companies or semiconductors companies, and then there's also follow, for example, like green companies also, so
Right.
the objective. So you need to understand the underlying investment or the index of the ETFs are following. What is the ETF is all about?
Yes. Yes.
Is it following a KLCI? Is it following MSCI ASEAN? Is it following MSCI or Dow Jones or S&P of Asia Pacific X Japan?
Right.
So that's first of all, what do you want? You want exposure in Asia Pacific, so you look for Asia Pacific ETF. You want the exposure just in Malaysia, then you look for the Malaysia ETF. You want an exposure in US, then you look for the US. So that's first of all. And then also you need to look at the expense ratio. Basically, ETF is a very effective investment instrument because of a low cost structure.
Yes.
So you want to find the ETF is the lowest cost possible in terms of the annual fee. As I mentioned just now, the management fee can range between zero point 0.1 to zero point 0.5 in ETFs. So it depends on what ETFs you want, and then within the ETFs, then you look for the best or the lowest fee structure.
Right.
And then another one, we want to look into the tracking error. Um, what is tracking error? Basically, ETF follows an index, okay?
Yes.
But then some of them may not be able to follow as close as they want with the index. So that's the error we're talking about. For our in our case of because the experience of what we have, all our tracking errors is less than 1%. In other words, it's 99% following
Follow the index.
the index.
Right.
Replicate the original index just as good as that. So
Wow,
that's
only
yeah.
1% error. That's
Yeah,
very
less
good.
than 1% error,
Right.
tracking error. So that's three things. The underlying investment or what type of index you're looking for, the expense ratio or the fee that they're charging, as well as the tracking error. These are probably the three the main things you want to look at, at any ETFs before you decide which ETFs you want to invest.
Right,
Yeah.
right, right. Yeah, I was quite interested in the agri-business, the theme that you have provided,
Yeah.
because I think in the recent years, there are a lot of research that says, food supply is actually going to be diminished. You have more demand than supply in food, and I think
Yes.
that's
Yeah.
probably one of the long-term investment opportunity over
Yes,
here.
definitely. Yeah.
Because in fact, actually last year I've actually invested in agribusiness,
Okay.
but it's direct
Oh,
agribusiness,
okay.
together with a few of friends. But
Right.
if I know that there is something like this, I probably want to just diversify and just invest in agribusiness
Yeah.
ETF like this.
I mean, I agree. I mean, of course, direct investment, there's a higher risk to it, right? So,
And
for
a lot of capital also.
yeah, higher capital. So this is again, when you have, your asset allocation, when you decide, with the amount of money that you have, where you want to put your money, right? And
Right.
when you understand that, like you say, globally, um, in future we're going to face land issues, we're going to face food issues and all this. So agri-business is definitely one of the best business for you to put in the money. And we diversify across 10 countries, Korea, Taiwan, Malaysia, Indonesia. So I have to go back the whole diversification, what is
Right.
it's all about. You don't put all your eggs in one basket. So
Right.
that is the whole idea. So we have this thematic. We hope that in future we can come up with, as I mentioned to you earlier,
More better
more
than
of these
other thematics.
thematics. Yeah.
Yes, yes,
Yeah.
yes. That technology sector is probably
Yeah,
one of the biggest
technology
things
is
that we
of
look
course,
at.
something that can serve well. Yeah.
All right, interesting. Okay, before we go to the next part, we're gonna come up with the next poll. And I hope that you are able to participate so that we are able to know how to communicate better with the investors out there. So let's go on to the next poll. Right. So after hearing what Encik Kari just mentioned, do you think that ETFs is probably better than mutual funds? Right. Answer yes or no. But really, I mean, somehow we indirectly invested in mutual funds because my insurance agent, right? They
Okay.
always try to push mutual funds, and they basically just show the performances and how good they are and all that, and we basically just without much research, because the deal was so good to be true, and they say, okay, now I just take my money and go, right?
Yeah.
But after years of looking at the performance, I'm shocked
No.
actually.
Yeah.
I'm really shocked. And you know what? Since then, after looking at the data, I've actually pulled out all investments in insurance, and just insurance is just insurance, lah.
Yeah. True.
And probably be invested better, probably get better results even in investing in ETFs itself.
Yeah, definitely. First of all, again, with no sales fees, no sales charge, just brokering charge of as low as 0.1%. That means, your 10,000 ringgit, if you want to invest in ETFs, you will get 99.9% of your money invested in the instrument.
Right.
Right, there's no sales charge upfront, or
Yes.
things like that. So that, and then even on yearly basis also, again, with a low management fee, basically, your investment is purely on the stocks, not to pay the fund managers and all, because it's passively managed. So we, as I mentioned, we only rebalance 4 times a year, unlike the actively managed, where you have to hire analysts and fund managers, and they
Right.
have to manage for you. So that hence that's why the fees is higher. Yeah.
Yes, yes, yes. I think one of the benefits that they can is actually the sales workforce, right, for mutual funds. Because I mean, for ETFs like you guys, you don't really have agents to actually
Yeah.
sell. Of course, you have the remisers and the brokers to do it
Yeah.
for you, but I'm not sure to what extent they're actually pushing ETFs or trying to sell ETFs to clients,
No, not much.
but
Yeah,
the volume itself will tell, right?
yeah.
And we'll be looking at the volume and as one of the concerns
Mm-hmm.
for investors.
Yeah.
Maybe you want to address, why is the volume still has not picked up, although this is one of the fastest growing asset class.
Okay. When you look at the volume, you have to understand a lot of our investors, or people who enter the bursa, they are traders or punters. Okay, so because of that, they look for all these quick returns.
Right.
More high risk stocks. For them to make money.
Mm.
ETFs is not that. ETFs is basically for you to put in 20-30% or even up to 50% of your investment into a mid to long term.
Right.
It's basically, instead of putting in mutual funds or unit trust, you have to do ETF because of the lower cost.
Right.
That's what it's all about. It's not about finding another instrument for you to punt or another instrument for you to trade. That's what ETF. Hence why you see a low volume. And for the past 10 years, since we had our first ETF, Islamic ETFs, a big chunk of ETFs actually subscribed by the institutional investors.
Right.
So they don't really trade, and they have a different avenue to trade ETFs, not necessarily through the market. They can actually create and redeem the units, or ETF units, off market. That's why you don't see a
It's
lot of
transacted
volume.
in
Yeah,
Malaysia itself.
yeah.
Right.
So for them to create the units, or for them to redeem the units, they don't really have to go into bursa. For retail investors, because of the size, yeah, they have to go into bursa, and yes, that's why you see a low volume, because there's very little participation by the retailers for as of today. But I would think it would increase. Just to share with you, because I mean, it's not for me to say, but what we heard is that Securities Commission (SE) is gonna launch the Digital Investment Management license. Basically, globally they call it robo advisors.
Right.
Okay, so once we have a lot more of these robo advisors in Malaysia, they will invest your money by buying ETFs. They're not going to buying stocks. So that's, I think, going forward, we're going to see a good increase in the volume of ETFs going forward.
I guess because as an individual investor, we are not really familiar with ETFs.
Correct. That's also yeah.
But like you said, I think in the US, there are a lot of robo advisors all over, and that's the reason why it actually kicked off quite a
We're
lot.
just about to start in Malaysia.
Right.
Even for our institutional investors, I would say less than 20%, or even less than 10%. I would say not even 20%, less than 10% actually invest by buying ETFs. They still prefer the traditional way of stock picking.
Right.
But these, I must say, have changed globally. If you go to developed markets, more than 50% of their investment will go through ETFs. That's for the beta, basically. For you to have a core holdings, and for you to follow the index, which is the basic,
like the basic
the
structure,
benchmark of your So only about 30 to 40% of their investment for them to find the alphas. Alphas basically, those 5-10 stocks that really gives you the high returns. But the big chunk of it, they will just invest in ETFs because it's easy for them to enter and exit the market. Yeah.
Right. Let's take a look at the poll results before we go further.
Wow.
So you actually have the answer. People still think that mutual funds are best. So I hope that you will take my action as well. Take out money into mutual funds and put into ETFs.
Yes.
Well, thank you very much for your participation. Now let's move on. If I'm an investor, for example, if I'm a retail investor, because I think ETFs are quite, like institutional investors, they know about these products and so on and so forth. But as an individual investor, what would my strategy be for ETFs?
Okay. Simple way, when you look at ETFs, as I mentioned, core holdings. That's your strategy, because if you have 10,000, it's a bit easier actually. But see, you have 50,000 or 100,000. Are you going to follow like 20 stocks and 30 stocks? Believe me, even the fund managers, not all of them can follow up to 30. So the best way is for you to build your core holdings based on certain benchmark, okay, and give you exposure. So I just go back to our Dow Jones Islamic Malaysia. the biggest 25 Sharia compliant by market cap.
Right.
So that gives you exposure to Tenaga, that gives you exposure to Petronas Chemical,
Right.
that gives you exposure to Sime Darby.
This is all blue chip
Yeah,
company.
all the blue chip names there. Okay, so it is stable,
Right.
and you know that you're following certain benchmark or certain index, right? So that will probably, you can put probably 20-30% of your portfolio in that ETF.
Right.
And then you might want to have some, as I again mentioned, that some dividend names.
Right.
Okay, so you put you look for ETFs that gives you, certain of returns or dividends. So you look at that kind of ETF,
Right.
and then you want to play a bit. You want all these thematic names.
Right.
Something different, or like our US 50. You want exposure to 50% in tech stocks in
Right.
US. Then you go into that, and then the rest you can look for that five stocks that you really like, that
Those alphas,
there's
right?
alphas, as I mentioned earlier, that they can really give you that's the kind of asset allocation that you should do.
Yeah.
Not for you to put 100% and look for 20-30 stocks.
Yeah.
Believe me,
Yeah.
even professional fund managers also they have their alphas that they really they really go, and then the rest is actually just to build the core holdings.
Right.
That's
Right.
why I
Right.
say in developed markets now, they don't bother to look for the rest. They just buy ETFs to create the core holdings, and they just go for the alphas for the remaining 40% of
For the
their
additional push.
additional push. They know they can get like 30-40% returns kind of
Right.
thing. But because they really understand that five stocks, not
Mm.
20-30 stocks, then you'll be all over the place.
Correct, correct, correct. Right.
Yeah.
So I guess it has to have a long-term view as well, right? You don't really use ETF to trade short-term because you will not
No,
really
no,
see
it's
the
not.
benefit.
Yeah.
Um,
Yes.
and of
Yeah.
course, if it's the long-term, you also have the capital gains and you also have the dividends.
Dividends.
So
Yeah.
that will
Yeah. And
it
then
will
it
bring
is
a long way.
stabilize your portfolio,
Mm.
because as I mentioned, when the market is down,
Yes.
you look at individual stocks, some of these names drop like 10,
Yeah.
20% and stuff like that, or but as a basket of 25 stocks or 30 stocks or 50 stocks, they're probably just going to drop just a little bit. That's
Right.
it. Yeah.
Right.
And actually it gives you a chance for you to dollar cost averaging of your strategy, to actually put in more money,
Right.
because the stock the units are now cheaper, but you
Yeah.
have a long term view, and these are good names that you want to keep for for mid to long term.
Yes, yes. So yeah, one of the webinars we did earlier was, when we talk to retail investors about
Mm.
stock market, they always use this term play stocks, and for Malay we say main saham, right?
Yeah.
I think that mindset basically has to
Yeah.
change when it comes to long-term investment, because I mean, if we look throughout the years, at the end of the day, the long-term investments are the one that actually make most of the returns.
Yes.
Instead of trying to figure out to go
Yeah.
in at the bottom and go to the top, right?
Yes. Yeah.
Like you mentioned, I think it's important to know what the objectives for the investors are,
Correct.
what kind of returns
Yes.
they want, and then
Yeah.
they should be able to adjust the portfolio.
Yeah.
But the good thing is, because ETF is already a portfolio itself, right? And it
Yes.
gives us
Yeah.
this exposure to a much bigger number
Yeah.
of stocks with
Yeah.
lesser capital, so
Yeah.
we can diversify
Yeah.
more.
And we rebalance it, as I told you,
Yeah.
every quarter. So see, we have 25 stocks,
Mm.
right? And because of the performance, or for whatever reason, based on the screening, uh, the index provider find two or three stocks they want to drop from the index.
Right.
Basically, when we do rebalancing, we are getting rid of the not good ones
Not
out.
performing ones
They are
now.
not performing
Mm.
ones for for different criterias,
Mm.
and we're adding the good ones into the index, or into the ETF. So you do it 4 times a year, then continuously keep on having the quality names inside the
Right,
ETFs.
right.
Yeah.
I think this could be a benefit itself, because if I were to manage, let's say, 30 stocks and rebalance them myself, I may
Yeah.
not get the performance that you want,
Yes.
that I
Yeah.
wanted, because you guys are professionals. I mean, you
Yeah.
have been in the industry for so long.
Mm.
And we will take a look at the performance in a short
Yeah.
while, and you can
Sure.
see how they actually track
Yep.
quite wonderfully on the
Mm.
index. The slide is there. Can we take a look at the slides? Right, so this is my ETF. This is the Titan 25, right? The 25
Yes. Correct.
major
Yeah.
stocks that tracks the index. So if you can
Mhm.
look at the chart, basically you can actually download this slide after the webinar, so it's already available on your GoToWebinar screen. But if you look at the performance, it basically tracks the index quite well over here, right?
Yeah.
In fact, if you look at the recent months, you can see that performance is actually better than the index
Yeah.
itself. If you are looking to track the index, I think this is one of the options that you can look at, right?
Yes. Definitely.
Because
Yeah.
we cannot buy the index.
No.
The only
Yeah.
way is to get this ETF.
Yeah.
This is what really interesting, the dividend ones.
Yeah. This is the MMID.
Yeah,
Um,
and I
um,
can see that the divergence is actually getting bigger and bigger throughout the years. I
yeah.
guess you guys are probably doing something right over here, lah.
Yeah.
Right?
Well, as I say, ETF is about a basket of stocks. the index provider have a certain criteria, for these stocks to be in that index, right? So every quarter, as I mentioned just now, we keep on do the rebalancing, get rid of the non-performings, or for some reasons these stocks doesn't qualify to be in that index, so we dropped it and put in new names. Hence the performance of the this particular ETS. And on top of that, because of the dividend play as well, Malaysia also has known to have quite good names, good counters, strong dividends. But I guess KLCI probably have less dividend names, so you can play that here, and you can see the performance, where they get better returns. For this particular ETS, where we track all the good dividend yields actually.
Right. Because I understand that most of the blue chip counters in KLCI, when you buy it at the market, the yields are normally very low, because the prices are normally quite high, right?
If I can add one more thing, because it's Sharia compliant, the ETFs, they don't have any financial names, and during bad times, the financial names unfortunately will get hit hard. So our ETFs, so our ETFs with no financial names, they will perform even better during during the downturn, or during the time where market is actually down.
Well, actually, this is one of our investment philosophy as well. The things that we have in the portfolio, of course, the dividend ones, really good investment grade stocks. But we leave out the banks as well.
We can choose one or two banks you like. I mean, that's up to the individuals, up to the investors.
But we found that that's the best performance, the best.
For Islamic by default, no financial names. Then we got away from those risks,
Right. Well, fantastic. So now we're going to move on. We're going to take a look at the next poll. This is the last poll. In fact, if you have any questions, you can ask the questions at any point of time. You can ask it now. Then later in the last half an hour, Chikairi will basically answer the questions. So you can just type in the questions, and we'll compile the questions later on. So now, so after hearing us, and I hope that you will change your mindset. If you have not invested before in ETFs, especially those who have not invested, do you think that you are likely going to invest in ETF in the next 3 months? Now, please be frank. It doesn't matter whether we are going to invest or not, but we just want to know, after this, would you consider investing in ETFs? All right, thank you very much. Now let's take a look at the results of the poll.
Oh,
there you go. See, you have done a very good job, Mr. Carey, convincing them that they're going to invest in the next 3 months. 3 months, not 3 years, 3 months, right? Thank you for your participation. So we're about to end the webinar, but of course, the main thing will be the question and answers that people can actually now. You have the opportunity to ask, the man who actually manages the 5 different ETFs itself in Bursa Malaysia, and of course he has a lot of experience in it. You can basically try to address whatever query that you have, whatever fear that you have. Just ask those questions. So before we go into that, so what would your advice be for investors out there who has not invested in ETFs?
Oh, okay. First of all, for those of you who don't even have CDS accounts, you must have CDS. That's the basic things, right? And then look at your portfolio. Okay, when you look at your portfolio, what is it that you want out of it? And a lot of people, they always look for this short-term gains and stuff like that. I mean, it's investment. You just try to follow Warren Buffett as simple as that. You're talking about 50, 60 years, or you're talking about at least minimum of couple of years, for you to invest. So based on that, then okay, what kind of stocks do I want to invest in? What kind of asset allocation I want to do, for my portfolio? So when you look into that, you want to start with the core holdings. What do you want to have the core holdings for your stocks? You want to have your core with all those penny stocks, or you want a core to be all the solid stocks that 5 years down the road, Tenaga is still going to be around. 10 years down the road, Sime Darby and Petronas companies are still going to be around. So these are the kind of names are in the ETFs, or the major ETFs that follow the major indices. So you want to create your portfolio based on that, on these core holdings. You want to have that names to safeguard, and you will get dividends and you get capital appreciation over a long period of time. And then, as I mentioned, you also want to look at what does it give you the comfort that you can sleep at night.
Right.
You know, you don't want to invest in something and then you have a sleepless nights because, oh, yo, what's going to happen to
Suddenly
this
Dow
one?
Jones fall
Yeah,
500 points and
or
you
what's
can't
going to happen
sleep.
to these stocks? Yeah.
Right.
So, you know, you want to diversify. So you don't not only diversify in terms of, you know, Malaysia investments, ASEAN or Asia Pac, but also you look at global names, you know, and
Right.
we have some of these ETFs here in Malaysia. And well, for some who are more sophisticated, you can look for the ETFs outside of Malaysia as well, right? But having said that, you must always remember, go back to your strategy of your investment, that what is it that you want, what is the objective. So hence, when you know that, then it's easier.
Right.
Then again, you know, when you talk about alphas, when you talk about your key stocks that you really want to push yourself, that you can do your own you know, your own homework and find that, you know, the best 5 to 10 stocks that you really like that can really perform. Yeah,
Right.
other than that, my advice is that, you know, the global community cannot be wrong, right? Why they have invested a lot, you know, 4 trillion net inflows into ETFs, and there's a net outflows into on mutual funds, and people are just even professional investors globally also using ETFs as a way for them to invest. There must be a reason, and hence the reason is it's very easy for them to build a portfolio. And of course, during the bad times when they want to get rid of 30, 50 stocks, we just by selling one ETFs, then they get rid of that exposure easily. Yeah, that's why, you know, that's my advice, you know, for people who wanna go into ETFs. Study and then understand first your own investment strategy or why you want to invest, what sort of returns, and then you look into the right ETFs for you to invest in.
Right. So I guess now that it's probably a good time for those who do not know about ETFs to actually find more information. Like you said, you have all the monthly
on myetf.com.my
myetf.com.my. You
Yeah,
can
of
find
course.
the information
Yeah,
over
that's
there.
only for our
Right.
ETFs, but I just, you know, I should also promote other ETFs, so you can look from other ETF providers in their own website. They also gives you the information on their ETFs as well. Yeah.
Right. So you can actually go to bursamalaysia.com to find all the other
Yeah,
ETFs there as
Bursa, and
well.
I think the Bursa marketplace also you can find information on the ETFs as well.
I guess that the market is basically changing its structure itself. Like you mentioned, Malaysia is going to have that digital investment management license soon, and this is going to change the landscape for ETF.
Definitely.
And you know, I think everybody should take this opportunity to learn about ETFs and get ready for the next big move.
Low
Right?
cost. That's what it's all about. Even digital investment. Sorry to say, but you know, you don't have to go through your agents anymore. You can invest yourself directly and choose what sort of portfolios that you want, and then the platform will invest it for you at a very low cost. So there's no sales charge, and that, I guess, you know, if people who really understand what investment is all about, you want to go on a very low expense ratio, very low cost basically. Yeah.
Right. But do you think that it would be good for new investors? Because you know, if I don't know about stocks, I've not invested anything before. Do you think that ETFs is a very good platform?
Of course. Yeah, it's a very good platform. It gives you the exposure, you know, directly to whether, you know, 25, 30 or 50 stocks, you know, the basket of stocks, and then slowly you can read and take a look at individual stocks in that particular ETFs, and that you can also again find your alphas, the one that really performs, and you create that as your, you know, additional investment. But for you, for first start, you don't know what stocks to invest, you don't know the performance of the companies, then you can just do ETFs. Why? Because ETFs already, you know, provided by the index provider and also by the ETF provider, a group of stocks that we have selected, or we have not to say create, but we have built the ETF meant for direct or easy exposure into any particular baskets.
Right. So that be it's quite easy because you let the professionals actually pick the stocks for you, and they just invest with a very low
Correct.
price. I guess
With all
that's
the
one of the
stock
best ways.
screenings, you know, when you do proper stock screening, so you actually have the best names already in that particular index. Yeah.
Right. Thank you very much, Zakari, for your information.
Thank you very much.
So we're going to go to the next part, which is question and answers. Right. So we actually have quite a number of questions here. So we're gonna basically filter out questions that are not related to today's topic. So one of the questions here is basically Malaysia is still quite far behind in terms of ETF awareness. I mean, that's maybe what he thinks. What do you think? Why do you think this is? Why is it are we still lacking the awareness? And how do you think company like fund managers like you guys, IBCAP, have what role do you play to actually increase its awareness in the market?
I guess the awareness is not there because people, again, the types of investment that they're looking for, and they didn't know that ETFs has existed all this while. So we have participated with Bursa, with SE, and also with other, I would say, individual companies that has been promoting investment. We've been on talks and everything, but I guess we alone at every cap cannot play that role. There have to be other players also playing that role. So that has been one of the key that we think that was lacking in the market. There's not enough information, or not enough information, as I say, but not enough awareness.
Right.
There's not
Maybe the
enough.
reach is not big enough.
Yes, yeah, probably the reach is not big enough. So yeah, we're playing our role. We've been involved in a lot of all these Bursa events, whether direct or some indirect, meaning we involved with other players in the market also to talk about ETF. So we've been doing that part, but maybe more players might want to come. Digital investment, we are very excited about them because we will work with every single one of them and to promote ETFs, because
Right.
in the end they also going to buy ETFs
Right.
for their investments.
Right.
Yeah. Yeah, that's basically, I guess, where is lacking. Not enough promotions, and but as I say, it's a matter of time. In fact, information you can find. You just type ETF in YouTube, for example. There's, I don't know, hundreds, if not thousands, of videos that you can follow, or look at
Right.
in YouTube, and it's free. And
Right.
then Google also. You just Google ETFs. What is ETFs? You can find all kinds of information. But then I guess the word ETF itself is not commonly used within the community, investment community,
Right.
actually. Yeah.
Right. Right. So you do go. I think basically the call is to have all the other fund managers to also start
Yeah.
promoting about
True.
ETFs.
Yeah.
But I think Bursa Malaysia has taken a very big effort as well to actually promote ETFs, because one of the workshops that we conducted for them was about ETFs.
Yeah.
And of course, Bursa Malaysia I has taken the initiative as
Yeah.
well to promote ETFs. So
Yes. Yeah.
hopefully, more people will come to Bursa Malaysia, and this video will go a long way.
Yeah.
When it goes up to the internet, and hopefully that people will know
True.
more about ETFs.
Yeah.
Right. Now, next question, Itikari. Do you recommend just buying one ETF or having a basket of them?
No, you shouldn't just buy one ETF. You should buy at least 3 ETFs
Right.
to give you
So the different
diversification
exposures.
within the diversification you are doing.
Right,
So you have one basket probably for just the main benchmark index. Be it KLCI, be it STIs, or any index. You just want to have to follow the benchmark index. So that's one ETF you want to put in, and then you also want to put in ETFs that gives you exposure to certain sectors, for example, because that particular sector has done very well or going to do very well for based on the information that you have. So you want to have that additional extra, but you don't know which stocks to choose from.
Right.
So you just buy that particular ETF. I would just giving an example. I'm not saying that ETF you should buy. I'm just saying say the ETFs on tech, for example. In recent years, Apple has done very well. Even Tesla also has done very well. And there's other names like Google also have done very well. Amazon has done very well. So you want to have an exposure into the tech, so you buy the tech ETFs, for example. And then I also mentioned about the thematic, something totally different than others. There's also a cryptocurrency ETFs now.
Yes, there is, but I'm not sure, because Malaysia is still,
not Malaysia.
Right?
But if people want to have something different, yeah, that's
Yes.
also a way for them to do it. But it's not Malaysia. In Malaysia, we have a bit more plain vanilla ones.
Right.
Like the agri, the agri business. There's one thematic, and we also have exposure in certain region, ASEAN or Asia Pac. That's the kind of. So you don't just buy one ETF. You can buy one ETF for Malaysia, one ETF for ASEAN, one for Asia Pac, and then you want to go global as well.
So you can be a global investor, right?
Yes,
and you don't need a lot of money to actually be exposed to the global markets.
Yes, true.
Right.
Yeah.
Very fantastic. Now, coming to that question about, you have the Titan 50, which is the US counters, and it's US dominated, right?
Yes, US
so
dollar.
as an investor, if I have a local trading account, do I have to have a foreign exchange trading account?
Okay, the thing is, no, you don't really need to have a foreign exchange account, but not all brokers have this, they call it, I think, multi-currency.
Yes,
multi-currency platform. So you might want to check with your brokers
broker.
whether they have whether they can do the multi-currency. When we say multi-currency, actually there's only one foreign currency, actually this
dollar.
US 50, yeah, the US dollar. So if your broker, have the facility, yeah, you can definitely trade this US Titan 50 there.
Right.
But if your broker do not have, I guess unfortunately you have to open another CDS account with
The facility.
the ones that with the
Right. So
facility. Then you can trade the
right.
US 50. Yeah.
Right. So you still have to trade in the US dollars lah. You can't
Yes.
like
Yeah.
buy from Malaysian currency and just
No.
trade.
Of course,
Yeah.
I mean, being Malaysians, we are earning our, income in ringgit. But when you go to that particular broker, you have to exchange your money to US dollar before you buy the particular that ETF, the US 50 ETF. You
Right.
have to have a US dollar basically before
Right.
you can buy the ETF.
So, a very interesting question. Will I be able to use ETFs as a retirement fund, retirement scheme instead of, because we have the PRS scheme, and of course
Mm-hmm.
EPF is also another way of
Yeah.
getting a retirement fund.
Yeah.
But can we consider ETF? Is it safe enough to be used as a
Yeah,
retirement
it
fund?
is because it's passive. Low fee, low expense ratio and all, and then at the same time, we have giving a very consistent performance because of, let's say, the dividend types
Right.
of ETF.
Right.
So that definitely with low risk, right? No, very low volatility. That kind of ETF will be good for the the pensioners, or
Mm.
for retirement. But again, you have to study the ETFs. What are the underlying assets, or what are underlying companies that they have inside the ETFs? If it's more of as I mentioned, the big caps, then there's the right kind of
Right.
types of ETF. Or for the say global, you might want to look at the US benchmark, for example, the S&P 500, which has been doing very well over the last 20 years. So that's the kind of ETF you might want to invest in, actually.
Right.
Yeah,
Right.
which I must say, our US 50. Sorry for promoting this.
No problem. No
Uh,
worries.
has a strong correlation with the S&P 500 for the past 5 years.
Right.
The correlation is as close as, I think, 0.97. That means the performance of S&P 500 and our performance US 50 is about the
It's
same.
about the
So
same.
that's the kind of investment that you wanna put
Right.
in your money.
Right.
Yeah.
Right. Right. Okay. Now, the next question is this is a little bit interesting. What are the differences between ETFs in advanced economies like US and European markets as compared to the emerging economies?
Okay.
Do you see any difference between the ETFs?
Yeah, of course there are difference. In the more we call it the developed markets and the emerging markets. Yeah, in developed markets, the fees, most of them are even lower,
All
and
right.
they have more ETFs to choose from.
Mm.
So these are the two main differences between the developed markets types of ETFs and ETFs that are listed in the emerging markets. Yeah, but in terms of what types of ETFs also play a big role. For example, uh, in Singapore and Hong Kong, they may not have the kind of ETFs that we have here in Malaysia. So I guess when it comes, for Islamic ETFs,
Mm.
right? We have five here
Right.
in Malaysia. I mean, IVCAP has five, but in total we have actually six Sharia
Sorry, right.
compliant. Globally, there's only 18 Islamic ETFs,
Right.
and six are listed in Malaysia.
Malaysia. Okay.
So that's a very
Okay.
unique. So as I
Okay.
say, for any regional players or any regional investors, when they want to look for Islamic ETFs, Malaysia would be the the
Wow.
place. So
Wow.
that's quite unique in that
Okay.
sense. Yeah.
So in terms of growth, I think there's a lot of potential lah.
Oh yeah,
In
yeah.
the
There's a
long
lot of
term.
upside potential
Yeah.
growth, be it for Malaysia or even global. We're talking about double-digit growth here.
Right.
For ETFs, whether it's in emerging markets or in developed markets. And I think it's not going to stop because for emerging markets like Malaysia,
Mm.
as I mentioned, we haven't even started our first robo
Right.
advisor yet.
Right. Right.
So we haven't
Right.
seen
Right.
any waves or anything. So this
Right.
is just the
Right.
beginning of it.
Yeah.
Yeah.
So I guess everyone forgot that these developed economies were once also emerging markets, right?
Yes.
So
Yeah.
there's a lot of
Yeah.
actually room to move.
Yeah,
Yeah.
took them 17 years, as I mentioned, to reach the first trillion before,
Before it
growth
really
just
jumpstart
is a
it.
tremendous. You see the tremendous growth.
Right.
So same thing in the emerging market. We probably may not going to see up to 17 years, but I must say, we have a lot of still catch up to do.
Mm,
Yeah.
mm, mm. So now the next question, the success of in ETF in the long run is basically is in the growth of the economy of Malaysia. I know being an experienced person, how do you see the Malaysian economy? So this is a little bit economic, lah,
Okay. Um,
because you have your advisors and all
yeah.
that, right? So how
Um,
do you think in in the next 5, 10 years, where we're
yeah. I
going?
mean, of course, we are still consider ourselves a developing country, right?
Right.
But when you look around, consistently, giving 4 to close to 6%, GDP growth, not many economies have able to do that
Yes.
consistently over the period of, I would say, 20 years
Mm.
since the early 90s. We have seen that kind of growth. But it's actually close to 30 years actually,
Right.
if you consider from the early 90s. So I guess Malaysia economy is still very strong. We have diversified, our economy also, from just relying on, first it was a agri base, and then we have manufacturing, and now we have, our services, so our economy is quite diverse, and uh, it's I don't see any problems. It's just the only thing people will probably have this fear, because of when they look at other economies, they
Mm.
perform like 6, 7, 8%, but that's not sustainable.
Yes, yes, yes.
But
They're very
ours,
volatile.
they are very volatile. Even look at our neighbors of Thailand and Indonesia. There were times when their GDP actually below Malaysia, when they're supposed to always,
Be higher.
higher than us. So
Right.
we have been quite consistent. So
Right.
I don't see,
Right. So
much of a
we are more
problem
slow
there.
and steady, lah, instead
Yeah,
of
we've always been the slow and steady. When market performs, we are slow and steady. When market crash also, we
yeah,
don't
yeah.
crash
We don't
as
crash that
bad as
much.
others. We're
Yes,
still,
yes.
able to
Right,
hold
right,
our market. I
right,
see. Yeah.
right. Okay. Next question is, no, do you recommend dollar cost averaging for ETFs?
Yeah,
Yeah,
definitely. It's
I think
the
it's the
best way.
easiest strategy.
Yeah,
Even
the
it's
easiest
easier.
strategy. You have 25 stocks, 30 stocks, 50 stocks, for you to, a basket of stocks, and then the moment the price will come down a bit,
Mm,
but these stocks are good, and most of them, usually when they are down is because of the market sentiment.
mm.
But nothing has changed in this, especially we were talking about, big caps.
Yeah,
There's
yeah,
no changes in their business model.
right,
There are no changes in the, the top management.
right.
There are no changes in the board of directors. It's just that,
Mm.
the market sentiment,
Yeah, it's all emotions, and
yeah,
then the
emotions,
prices
yeah,
came down.
yeah. But of course, for the more volatile, I guess the smaller names, the small caps and mid caps is different story. But
Right.
when you talk about big caps,
Yeah,
dollar
they
cost
don't have
averaging
much.
in those ETFs is be the best actually.
Right,
Yeah.
right, right, right. Okay. Next question. Do you foresee Ivy Cap having, let's say, bonds and commodities ETFs in the future?
Yeah, definitely bonds, especially global Suku, or at least Asia Suku is one of the areas we are looking.
Okay. Mm.
And then when it comes to commodities, depends. We have one already, but not ours. Another company, they already have a gold Sharia ETF. But yeah, we will probably look into, say, palm oil,
Right.
crude oil, as other types of commodities
Mm.
that we will probably come up with ETFs.
So
Yeah.
you do have a future
Yeah, because
outlook for this,
depends on the market, right? I mean, when the market is down, the best way to put your money will be in gold.
right?
So you would want to buy, gold ETFs
Yeah,
when the market is down.
yeah,
So that's the
right,
kind of strategy.
right,
So or other type of commodities. Or when the commodities run, the easiest way is for you to put your money in,
right.
certain types of commodities. Then,
Okay.
yeah.
So in a market like ours, because we understand, like, for example, in the more developing economies like US, they have inverse ETFs. I'm not sure whether you can actually do it here, or are there any plans that
Okay.
even introducing inverse ETFs?
Yeah, I think SC and Bursa has played quite I would say very strong roles in this area. So we're not just looking at the plain vanilla
Right.
ETFs. And if you look at Taiwan, for example, we had a chat with some of the experts from Taiwan recently. One of the reason the ETFs perform well, it's only after they introduce the leverage ETFs
Leverage, yeah.
and the inverse ETFs. So we're looking at this space, and I think there are other players also in the market looking at this
Right.
space because it will help not just individual or retail investors, but the inverse ETFs will also actually help the institutional investors.
Yes, they
You,
get the
you,
hedge and
yes,
as
you don't
well.
really have, because when the market is down,
Yeah,
the share prices are going down. If you want to sell at that point of time, you're so
correct,
what they can
correct.
do is to buy inverse
Yes,
ETFs, so to give them a new way of strategy to add to their portfolios.
right,
Yeah.
right. So at least when the market comes down, your performance is
Yeah,
still up
yes,
there.
because of the inverse ETF. Yeah,
Right,
yeah, it will
right,
help. I mean,
right.
of course, the other way around, the leverage also, leverage ETF.
Mhm,
So
mhm,
when the market is flying,
mhm.
rather than making 10% return based on that particular index, is a three times leverage. So
Make three
you're getting
times more.
30% returns
Right,
on the same index.
right,
Yeah, so
right.
that's also, so it goes both ways. So it gives more options,
Mhm.
and it gives of course, a higher chance of people making money, or
Right.
lose less money lah, put it
At
that
least
way.
they know how to at least manage and mitigate some risk lah.
Yes, yeah. So it's coming, and
Yeah.
I think it's only a matter of time.
Mm,
I would foresee as early as next year,
mm.
if not the year after, we will see
Right,
all these
right,
leverage and inverse ETF in
right,
Malaysia.
right.
Yeah.
So, but the regulatory framework is already ready for this, or
Yeah.
have
Yes, they're preparing for it. So that's why I say, it could be as early as next year,
right? Mm,
or the year after. But yeah, the regulators are very much aware and involved in all this.
right,
Yeah.
right. Yeah, fantastic. Um, the next question will be, how do we track the returns on the ETF?
Again, you want to, depends on how you say you want to track, because you can look at the share price.
Mm,
It's listed in Bursa, so you
yes,
can
it's all
follow the
transparent, right? You just
yeah,
go to the
yes,
share
it's in
price.
Bursa. I'm sure
Mm,
Bursa Marketplace, have all the ETFs there as well,
yes, they
just like
do.
any other stock. So you can just follow there. You can also go to our website or any of the other ETFs providers' website to see the performance of the
Mm,
ETF. So we have we call it fact sheets. So you can look at the fact sheets of each ETFs and see
mm,
the performance, 1 month, 3 months, 6 months, year to date,
right.
and so forth. We have all the information there. You
Including
can,
the dividends, the performance of the
yes,
dividends
yeah,
and all that,
including
right?
dividend
Right,
performance. Yeah.
right. Um, okay, some of the questions here are quite basic. I think you have addressed it before, like why are the
Okay.
volumes so low for
Okay,
ETFs?
yeah.
Uh, I
You
think that
don't have to
one,
worry about that.
yeah.
There's always a buyer and seller.
Mm,
You probably won't see as much as any other stocks, but we have a market maker
mm,
actually. These are actually securities or investment banks playing the role as a market maker. So they provide liquidity to the ETFs,
mm,
as both as a buyer as well as the seller.
right, right.
The only thing is that what we're doing further is to close the spread, because previously we have seen the spread about 5 cents and things like that.
Mm,
But I think if you monitor some of our ETFs from now going forward, a lot of this spread is as low as half cent or only 1 cent. So
right,
you follow very close to the NAV,
yeah.
very efficient, and you can buy, or you can sell
Mm,
very close to
very
the
close price.
NAV. Yeah,
Right.
that's the kind of commitment that we are putting in, and working together with the people in the industry, the investment banks and the
Mm,
securities firms
mm.
actually.
So I guess I think that there are a lot of people probably do not understand the role of market makers in there as well,
Okay,
because
yeah.
as a normal retail investor, when we look at the screen,
Mm.
we're only looking at a few lots on the buy side and a
Uh,
few lots on the sell side. We're
yeah.
thinking, if I buy, can I sell later,
Yeah,
right?
definitely. Because market maker will always be there.
Mm,
That's their role. So you don't have to worry about the liquidity. Maybe you don't see much transaction,
mm,
but in terms of providing the liquidity, the market makers will always be there.
right.
As I said, the only thing is that previously the spread is big, but now the spread
Yeah.
is very close. So you will see buyer and seller, say 30,000 or 50,000 on both sides. So that will gives investor the chance. If you want to buy, there's
Mm,
50,000 on the offer, or if you want to sell,
mm,
there's always about 30 to 50,000 on the bid. So
right.
there's no issue of liquidity that you cannot. So if you buy, later on you cannot sell.
Yeah.
I think that is just somehow just the fear of the investors,
Yes,
but
correct,
the
correct.
market maker is always there.
Yeah.
They provide the liquidity.
Yeah,
Yeah.
yeah. I guess this is what I think the message has to be sent out to the investors as well. That
Mm.
at the back of the whole scene is actually our market makers.
Yes, there is market maker. Yeah, providing the liquidity there.
All right, all right. Okay, this question, I think I already asked you the question. You cannot answer that because you're asking about how many ETFs are you going to plan for next year?
Okay, just wait. Just watch the space. You know,
Right.
it's not about how many ETFs, but for us, it's more about what is the right ETFs for us to list on Bursa. What is the kind of ETFs that people, you know, they want to invest. What was the demand? So
Right.
that is the more the right question that
Yeah, right.
that playing in our heads, as well as
Yeah.
what we want investors also to share with us.
Right.
What sort of types of ETFs they want to.
Right,
So
right. Yeah,
yeah,
it's better having one or good two ETFs that everybody wants than so many of them.
yeah, true.
Yeah, I think that's all the questions that we have today. Once again, Chikari, thank you very much for joining us.
It's welcome. Thank you for having me here.
Oh, yeah, thank you so much. So we can actually download the presentation slides. You can actually download this. It's already available on your